Good morning and welcome to IG's early morning call on Monday, the 2nd of October. Coming up on today's programme. Well, the yen nears one-year low. The dollar, however, starts Q4 on the front foot, pushing the US dollar Japanese yen closer to the 150 mark. Also coming up, US jobs are in focus. A raft of data out this week will tell investors whether the US labour market continued to slow in September. And we're also keeping across oil prices, with Brent and WTI crude remaining near multi-month highs ahead of the next OPEC Plus meeting on Wednesday. Well, let's start by taking a look at volatility this morning to see what's happening on the VIX chart. And as you can see, well, volatility has increased since Friday, but fell over the weekend and is currently down 1.62% at around 1753 on the day. Well, volatility has climbed much higher since the US Federal Reserve interest rate decision, and that was on the 20th of September. And you can see which is when it left rates unchanged. However, it did indicate one more hike before the year end. Since last Wednesday, though, the VIX has decreased again. If we look at the 1 week chart, if I can just change this to the 1 week chart, and you can see that it has gained actually about 1.7 since last Monday. Well, it comes as well as US stocks closed the month lower, with the S&P 500 index logging its first losing quarter in a year. A narrowly averted US government shutdown also hovering. In addition, the yield on the 10-year Treasury note hanging around the highest level in almost 16 years, sapping the appeasal of riskier assets. And then there's the question of how far the Fed is willing to go to combat inflation. This will all be weighing on the VIX. Well, let's move on now and look at how things are looking across Europe pre-market. Well, this is the picture, starting with the FTSE 100, currently down 0.24%, the all sessions index on the IG platform. And then if we move over to France's CAC 40, also down 0.16%, and Germany's DAX also in the red, only marginally, down 0.01%. Well, European shares rose on Friday, however, and that was after a drop in Eurozone inflation in September, which cemented hopes that the European Central Bank will pause its interest rate hikes. But the benchmark index still logged its worst quarter in a year. The Pan-European Stock 600 index was up 0.4% on Friday, but ended its quarter 2.5% lower. Well, let's have a look at how things are looking overnight in Asia. Well, the Nikkei 225 down 0.07%. Well, the Nikkei 10 negative in the last few minutes of trading. And then also Singapore's STI also in the red, down 0.24%. And Australia's S&P ASX 200 also declined 0.22%. Well, China's economic data offered some optimism to investors amidst the property crisis, with manufacturing PMI expanding for the first time since March, but clearly not enough to cheer investors there. Japanese stocks were also boosted, but clearly they're not enough by the Bank of Japan's quarterly Tankan survey, which showed an improvement in business sentiment. And Australian investors were also clearly cautious ahead of a Reserve Bank policy decision on Tuesday, the first under its new governor, and New Zealand Central Bank also setting policy on Wednesday. Well, moving on, let's have a look at the Wall Street market. Well, Wall Street dropped for the second straight month, with the S&P 500 posting its biggest monthly loss in September since December last year. Well, the Dow Jones Industrial Average closed down 0.47%. The S&P 500 was down 0.27%, and the tech-heavy Nasdaq rose 0.14%. Energy stocks, however, was the only sector that actually finished higher on Friday, as oil prices have been hovering upwards of $90 a barrel. A potential government shutdown in the US has also been weighing on Wall Street. But let's have a look at how the stocks are poised to perform today. If we look again at the all-session stock on the IG platform, first of all, let's have a look at the S&P. That's currently up 0.45%. The tech-heavy Nasdaq up 0.67%. And the Dow Jones also up about 0.43%. Attention this week will now turn to a few bits of data, which we'll go into in more detail in a moment, including ISM Manufacturing, JOLTs job openings, and of course, non-farm payrolls. But we'll bring you more of that in a moment. But let's look at what else is on the agenda. Well, China's factory activity expanded at a slower pace in September, according to Caixin PMI data unveiled on Sunday. The private sector survey fell to 50.6 in September from 51 in the previous month, missing analysts' estimates. Well, on Saturday, official NBS PMI showed factory activity expanded for the first time in 6 months in September. Well, we won't get any reaction on the market today, though, as both Hong Kong and mainland China indices are closed. However, Hong Kong will reopen tomorrow, but other Chinese stock exchanges will remain closed for the rest of the week. Well, moving on, and in Japan, business confidence among major Japanese companies continued to improve in the third quarter. Well, the reading of the key index improved to 9 from 5 3 months earlier, up for the second straight quarter and better than expectations. Concerns about slowing global growth remain, however, in a context of high interest rates around the world, bar Japan, but the survey highlighted that parts shortages that have plagued automakers and other industries continue to ease, supporting exports to key markets. Well, looking ahead, the Bank of Japan said manufacturers' confidence is expected to improve slightly to 10 from 9. Well, meanwhile, the yen slid on Monday. If I just pull up the Japanese yen and the US dollar price chart. Well, the yen slid on Monday to its lowest since the 21st of October at 149.74 per dollar, even as the border rally in the US currency took a breather following the dollar index's climb to a 10-month peak last week. Well, some traders believe the yen moving ever closer to the 150 mark could trigger intervention by Japanese authorities, similar to their action last year, to support the currency. So we'll certainly be keeping across that. Well, in the UK, nationwide house price index remained flat in September compared to August. Economists had anticipated a 0.4% drop. On an annual basis, the index fell by 5.3%, the same as in August, compared to expectations for a 5.7% fall. Elsewhere today, we will also get Eurozone Unemployment data. That's coming out at 10 a.m. and it's expected to remain at 6.4% in August. Well, then at 3 p.m. This afternoon, US ISM Manufacturing PMI is expected to remain below 50 for an 11th consecutive month. 47.7 is what the market expects for September, a marginal improvement on the 47.6 recorded in August. A reading below 50 means that the activity in the manufacturing sector is contracting. Well, some central banks are due as well to decide on rates this week. Starting tomorrow with the Reserve Bank of Australia, the market sees no change and the cash rate should remain at 4.1%. That said, a recent uptick in inflation let economists believe that another rate hike could happen before the end of the year. Well, the meeting is the first under the new RBA Governor, Michelle Bullock. A hike on a first meeting is very unlikely, and as that uptick in inflation was largely caused by an increase in oil prices, the RBA can easily overlook a temporary spike, but will have to react soon enough if high oil prices persist before higher costs spread throughout the Australian economy. Well, the Reserve Bank of New Zealand on Wednesday is also expected to stay put at 5.5%. Inflation is still decelerating in the country, and the official position is that rate increases have yet to be transmitted to the broader New Zealand economy. Well, if we just pull up the Australian dollar against the US dollar price chart here. Well, the Aussie and US dollar pair are currently trading lower, down 0.29% on the day. But the pair received upward support, though primarily supported by the upbeat Chinese PMI data revealed over the weekend. However, the US dollar, as noted, has continued to demonstrate resilience after the moderate economic data released on Friday. Also, the US dollar strength is also attributed to the positive performance of US Treasury yields. And of course, the Aussie dollar could further face challenges due to increased market caution surrounding the US Federal Reserve's interest rate trajectories. Be keeping across that. And if we just move over to the New Zealand dollar versus the US dollar, well, it's also currently down just marginally 0.04%, the pair on the day. The pair did retrace from 7-week highs, though, during the early Asian session. Traders will now be waiting on the sidelines ahead of the US ISM Manufacturing PMI data and the RBNZ rate decisions, which could trigger some volatility. Okay, well, let's look at what other data is due out this week. Well, US employment data will keep the market on its toes throughout the week. JOLTs job openings will be released tomorrow afternoon and are expected to remain broadly unchanged on last month when they fell to their May 2021. On Wednesday, ADP employment change is expected to slow for a third straight month. 160,000 job creations in the private sector are forecast after 177,000 in August. And on Friday, we'll get September non-farm payrolls. Their 2 job creations are forecast to slow down. Early expectations are for 163,000 to be added to the US economy. Well, looking at all these forecasts, economists believe that the labour market is now well underway and that the US Federal Reserve's tightening policy is doing its work. Okay, well, let's just have a look at the US dollar basket. And I'll just pull up that price chart for you because the dollar rally will undoubtedly be tested this week with a raft of data to watch, as just noted there. After clocking its best quarterly performance in a year last month, thanks to persistently hawkish Federal Reserve rhetoric. And as I said, well, it's currently marginally down 0.01% against its peers. So starting the last quarter of the year, though, just sort of flat at the moment due to prospects of US interest rates staying higher for longer, it has been supported. Okay, well, in other news, this week it will be very quiet on the corporate front. Yet here in the UK, the focus will be on the retail sector again with a series of corporate reports. On Tuesday, Greggs will release its trading statement for the third quarter, and Boohoo as well will release its half-year earnings. On Wednesday, Tesco will also post its earnings and revenue for the first half. And then Thursday, we'll also see a trading statement from Imperial Brands. And Friday, there will be full-year earnings from pub chain JD Wetherspoon. Well, let's take a look at commodities because last Friday, the Baker Hughes total rig count fell by 7 to 623. Now, a drop mostly due to oil rigs in operation. The number of functioning oil rigs fell by 5 to 502. Hitting a new 19-month low, dropping to, I should say. Meanwhile, OPEC Plus members are due to meet mid this week. Saudi Arabia and Russian supply cuts are expected to keep feeding into stronger oil prices, with supply cuts to be probably extended into 2024. That's what the markets are anticipating. But neither country wants to see prices falling while they have to manage higher government expenditures. So let's have a look at how Brent and WTI are performing this morning. First of all, let me pull up my US crude oil price chart, WTI, and we can see that WTI is up 0.44% today. It's trading around $90 a barrel. A Reuters survey, let me just show you Brent as well. And Brent, meanwhile, is also trading up 0.41% today, trading around $92 a barrel. Well, a Reuters survey there of 42 economists and analysts polled on Friday showed that they now forecast Brent to average $84.09 a barrel in 2023, up from August consensus of 82.45. Well, Brent has averaged around 81.94 so far this year. Despite today, it's still up, hovering around that $92 a barrel mark. Well, last week, oil prices soared to their highest level this year. WTI continues as well to hover high up around the $90 a barrel. As supply concerns, and that's those supply concerns as noted from Saudi Arabia, OPEC members potentially extending cuts even further, and also low inventory data as well, feeding into concern and weighing on the minds of investors, supporting prices. Well, let's have a look as well at gold today and see how that is getting on. Well, it's down 0.21% on the day. Last week it plunged as well as bond yields jumped and against a firm US dollar, but it found support at around 1848, but posted its biggest weekly decline since June 2021. Well, that's all we've got time for today on Early Morning Call. Thank you very much for watching, and do tune in to our afternoon programmes to look ahead and beat the street this afternoon ahead of the Wall Street Open with IIG's Angeline Ong.